Good day, guys. It's Kevin Talent once again. And today we're talking about how to combine the engineer liquidity concept with the power of three. If you don't understand the engineer liquidity concept, I'll be referring you to this particular video. This one I made last year. Go and watch it. I explained everything about the engineer liquidity concept. I also gave some live chat examples using trade I took with this engineer liquidity concept. So today we'll be talking about the power of three. What is the power of three? How to identify the power of three on the chart. And I'll be showing you some live chart examples as well. So let's start. So what is the power of three? The power of three is a trading pattern that breaks down price action on the chart into three phases: the accumulation phase, the manipulation phase, and the distribution phase. I'll be explaining these three phases with this diagram below here. So what is the accumulation phase? The accumulation phase is a period of consolidation where price moves between a defined area of support and resistance. In this particular phase right now, price is going to be moving sideways in a consolidation form. This is when a lot of big players tends to accumulate orders bit by bit without no significant move. Okay, so after accumulating enough orders in this accumulation phase, gathering enough buy side and sell side liquidity above and below, price suddenly spikes up or down to actually trap traders. That is where the manipulation phase comes in. So this manipulation phase is where institutions triggers stop loss orders. This is where most retail traders get trapped because the manipulation phase is actually to manipulate traders into thinking that price wants to sell. In this case, we have an established support level here. I told you accumulation phase move between a defined area of support and resistance level, right? Creating a pool of buy side and sell side liquidity above and below, right? Now, this manipulation phase now happens when price breaks out of this accumulation phase, breaks out rapidly, then retail traders will think a breakout of support is happening. And most times, this is how we see it. When price breaks out of a support level, we expect price to retest it and sell. First of all, this breakout now has stopped that everyone that are actually buying from this area, those ones that want to buy from this support, their stop losses are below this level. This breakout has actually stopped them out. Then those that also want to sell from this resistance, because this support has been broken and price has flipped to resistance, right? So those that also wants to sell from this resistance, their stop loss is also above here, all right? Which is another trap. After price has broken out rapidly, you will now see a sharp move to the opposite side. This sharp move now is also going to stop every single sellers around this level again. That is why we call it a manipulation phase. It's going to stop both the buyers and traders that also wants to sell from this level. Now, when price has manipulated orders around this level, stopping everyone out, we are now going to see a sharp move to the opposite side. And that is where the real trend begins, the distribution phase. Now, the distribution phase is where the big guys, the institutions, sell off their accumulated orders, right? And this is where we get into the trade. When price has actually manipulated everyone out and we see the sharp move to the opposite side, price tends to actually break out of that resistance. And when price breaks out of that resistance, we might likely see a pullback into that level to react from that resistance as a retest or probably a breaker block. There will likely going to be a very valid area of interest around that point where price will likely react from before the buys. So that is where you might actually see an opportunity to join the distribution above. Now, the most important part of this video, combining engineer liquidity concept with the power of three. I just explained what the power of three means and how they form, right? Now, using the engineer liquidity concept, instead of waiting for this distribution phase before we enter a trade, we can actually catch our trades during this manipulation phase. How? The engineer liquidity concept, in this case, let's say price is in an uptrend. And after this break of structure, we expect price to pull back a little, that's give us a little retracement before the next high, right? Then this accumulation phase starts happening. And remember the definition of accumulation phase, where price moves in a defined area of support and resistance. Keynote, gathering a pool of buy side and sell side liquidity above and below. So during this accumulation phase, there's a lot of liquidity around this point. So let's say we have this breaker block with a fair value gap, very nice high probability point of interest. Now what happens after this accumulation phase and price wants to manipulate? Price most times manipulates into an high probability point of interest. It could be a fair value gap, it could be a breakout block, or a mitigation block as well. So that is where you wait for the others. And most times like this, I like going aggressive in the sense that I'm just going to place my entry there and my stop loss below this point and wait for price to do what? Give us that fake breakout, stopping everybody out before triggering my position here. Then I'm joining the institutions in this distribution phase easily. The same thing, the same explanation here, you apply it on this downtrend as well. Now let's go into the live chart and I'm going to show you trades I took combining engineered liquidity concept with this power of 3. Let's go into the live chart now. Now, before we continue, do you know you can trade over 1,000 assets on Simple FX Broker? You can trade forex, crypto, and commodities, including gold, on Simple FX with no minimum deposit. Start now with up to 5,000 first deposit bonus and 10% cashback. Check the link in the description to sign up. Now let's go into the live charts. Let's look for some examples, some live chart examples. This is XAU USD. Now let me start with my most recent trade. I was able to spot this accumulation here. Then I was expecting price to actually break out to the upside, but seeing price break out to the downside, I noticed price reacting from this particular reclaimed block. That was where I got my entry from. Now remember, this fake breakout here, this manipulation here, was to take out the entire sell side liquidity around this level. Remember, I told you during the accumulation phase, price tend to build buy side and sell side liquidity above and below, right? So this manipulation was to take out the sell side liquidity around this level. And I also told you that after price has manipulated, price is going to react from the next high probability point of interest before distributing. All right. So in this case, after the manipulation, we see price reacted from this level, which was where I took my trade. Now, using this particular accumulation as a whole as my engineered liquidity. So we see price do what? See price reacted from it. And after the manipulation, we have our distribution. All right. So let's check for another example. Let's check for another example where the AMD pattern formed. This was the trade I took late December. Here we have another accumulation. Here we have another accumulation. And as usual, we have liquidity build up above and below. The manipulation is only engineered to take out liquidity below before the distribution will take out liquidity above. All right. So when we have this accumulation here, I'm looking at the nearest high probability point of interest where price might likely react from, which is this last POI here that swept liquidity. And we see price manipulated into that particular order block. And after the manipulation, the price reversed immediately to the opposite side. See price reversed immediately to the opposite direction here. And remember, I also told you that after the manipulation, price distributes, and that is where we will likely get our entry from. And when price distributed, you can see price come back into that level to react from this particular order, this particular fair value gap. Another nice entry before price started going up. And the most important thing about the AMD pattern is for you to be able to identify the manipulation. That manipulation is very, very important. So that will be all. If you've learned something, don't forget to like, to subscribe, and share this video to your friends. And also, I'm still trading live on my Telegram channel. The link is in the description. You can actually join up. I share my trades on Telegram for free every week. And that will be all. I'll be seeing you guys in my next video.